Now, you've been watching headlines, scrolling through social media, and even talking to friends and family about real estate. And you probably noticed how confusing the conversation around the Tampa Bay market has become. One person says prices are dropping, another says it's a competitive market, someone else says they're waiting for the perfect time to buy, but no one seems to agree on what's actually happening. What we're seeing is a lot of outdated information mixed with strong opinions, and that can make it really hard to know what to do next. Buyers don't want to overpay. Sellers don't want to leave money on the table. And a lot of people are stuck waiting because they're unsure what's real and what's noise.
And that's exactly why we put this update together. The Tampa real estate market today doesn't look like 2021. It doesn't look like 2024. And it doesn't behave the way most people still assume it does. The rules have changed, and if you're using old expectations to make decisions today, you can easily miss opportunities or make costly mistakes. In this February 2026 market update, we're breaking down what the numbers are actually telling us, where buyers have leverage, where sellers still hold value, and how this market is really functioning right now. And if Tampa is on your radar for buying, selling, or relocating, this is the kind of information you want before making a move.
Reach out to us and let's talk through your goals and your timing, so that way you're not guessing your way through the market.
So what we're seeing right now is a Tampa market that's operating at a much more realistic pace. Over the past few years, the market was driven heavily by urgency and emotion. Buyers felt pressure to act quickly, weigh contingencies, and make decisions that didn't always make sense long term. Sellers got used to instant results and multiple offers. That environment no longer exists, and that's not a bad thing. Today's market is slower, more deliberate, and more balanced.
That's right. Homes aren't selling in a weekend anymore, right? But values also aren't falling apart. Instead, fundamentals are back in control. Interest rates, inventory levels, insurance costs, and affordability are now shaping the market. This doesn't mean the market is weak. It means strategy matters again, and that's a big change from what many are used to. Let's start with single-family homes. The median price is sitting at around $430,000, with just 1% growth year over year. Now that tells us the prices are holding steady, but appreciation is no longer automatic. Sellers can't just list and expect results without a plan. Homes need to be positioned correctly from day one, and if they want to attract serious buyers.
Homes are also taking longer to sell, averaging about 46 days on market. Buyers are asking better questions, reviewing numbers more carefully, and walking away when something doesn't add up. This puts the single-family market in a more neutral position. Sellers still have value, but pricing, condition, and presentation matter more than they have in a long time. One of the clearest shifts we're seeing right now is negotiation. Sellers are receiving about 94% of their list price on average, which is lower than last year. That tells us buyers are no longer overpaying just to secure a home. Buyers are negotiating repairs, credits, and price adjustments, and they're willing to walk away if the deal doesn't make sense.
Roughly 1/3 of active listings have already had a price reduction. Now that tells us many homes are coming to market priced based on past expectations instead of current reality. This is no longer a speed market. It's a strategy market. And buyers who are prepared are putting themselves in a strong position. New construction is playing a major role in today's market as well. Builders in areas like Pasco County and parts of South Tampa are offering aggressive incentives, including mortgage rate buydowns as low as 4.99%. When buyers compare monthly payments instead of just purchase price, these incentives make a big difference. In many cases, a new construction home with incentives can be more affordable month to month than a resale home priced lower.
This puts pressure on resale sellers, especially in neighborhoods with nearby new construction. Buyers are comparing options side by side, and if a resale home doesn't offer value or flexibility, it's going to sit longer. Add in insurance costs and flood or wind considerations, and buyers are being much more selective than before. Hey, if you're relocating to Tampa or even thinking about it, this is exactly why we created our Tampa Relocation Guide. It breaks down neighborhoods, schools, pricing, insurance considerations, and lifestyle factors so you can understand what to expect before making a move.
That's right. You can download the guide for free using the link below in the description. It's a great starting point, especially if you don't feel confident navigating this market. Condos and townhomes are behaving very different from single-family homes, so that's very important to understand. With more than 6 months of inventory, this is clearly buyer's market territory. Supply is outpacing demand. And that's creating opportunities for buyers who are patient and prepared.
Rising HOA fees, increasing insurance costs, and new reserve study requirements are forcing many owners to sell, especially in older buildings. Buyers have leverage here, but due diligence is critical. Buildings with strong reserves, completed inspections, and transparent financials are holding their value. Buyers feel more confident when they understand the financial health of the building they're buying into.
That's right. Older buildings without funded reserves are seeing price softening, sometimes up to 12%. Financing has also become more restrictive, with many lenders requiring 25% or more down. Now, this has created a two-tier condo market. Now, mortgage rates have stabilized around 6%, which has helped bring some buyers back into the market. Insurance remains one of the biggest affordability challenges in Tampa, especially in certain areas. Now, inventory levels are also higher than the national average.
Because of this, Tampa is projected to see a modest price decline of around 3 to 4% over the course of 2026. This is not a crash, but a continued adjustment toward balance. So nearly 1/3 of transactions are all cash, largely from buyers relocating from higher price markets. These buyers are less sensitive to insurance rates, which shifts competition in certain price points.
First-time home buyers now make up about 21% of purchases, and institutional investors have largely stepped back. That creates opportunity, but also slower transaction volume. Now, for sellers, pricing to today's market is critical. Homes that are priced correctly and offer concessions like closing costs, credits, or rate buydowns are attracting buyers.
Now, for buyers, this is the strongest negotiating environment we've seen in years. With the right preparation and guidance, there's real opportunity without the pressure of past markets. The Tampa real estate market isn't falling apart. It's recalibrating, and that creates opportunity if you understand how to move within it.
So, if you're thinking about buying, selling, or investing in Tampa Bay this year, call, text, or email us. Let us walk you through your goals and your timeline. Also, don't forget to subscribe and hit the bell icon so you never miss a Tampa market update.
Take care and stay blessed.